Welcome back to Retail Investors Decoded. I'm Carl Hazeley, and I'm delighted to introduce this week's guest. Now, she is the CMO at Zero Hash and a newly minted author of Ticker Shock. It is the most important Katy Perry. Welcome to Retail Investors Decoded.
Wow, thanks, Carl, for the lovely intro. I don't know if I'm the most important Katy Perry. Definitely not the wealthiest, but the only one with a book about the stock market. And the only one that has been to a Finimize event so far.
So far, watch this space. And you're certainly the most important one when it comes to retail investors and getting in front of them, understanding them, and what drives their attention.
That.
Absolutely. So let's start with Ticker Shock. I've read it. It's a good read. It's a quick read. I found myself just turning page after page after page. Why did you write it? What's the point? What are you trying to get at with it?
Yeah. So Ticker Shock is my new book. It explores how retail investors are reshaping the capital markets. It's born out of my experience over the last, call it 6-7 years. So in 2019, I joined a little investing app called Public. At the time, there was probably 10,000 users. I was the head of marketing, and my goal was to help this company make the stock market more accessible for everyday people. Now, at this time, it was pre-COVID, pre-GameStop, and what drew me to the opportunity was I had friends who were kind of coming up in their career, getting to the point where they had some money. And I had one conversation with a friend, a very successful salesperson, and she said, all my money's just sitting in my bank account. And I was like, what? And I realized at the time how fortunate I was. When I was 18, my dad actually showed me the compound interest calculator, kind of showed me the fundamentals. He opened me up with a Vanguard account. So that had always been kind of like baked in.
Yeah.
But what was interesting was flash forward a few months to 2020 and COVID, and people were sitting at home and they were on their phones, and I started to see something happening. And our users were growing, and then flash forward to GameStop, and I think our community of investors like doubled in size. Around the same time, I remember working with you guys. I think we did webinars or something at Public, but I remember Finimize had the same sort of trajectory where people were like, wait, I want to read Finimize, alongside all the other newsletters I read. And it was fascinating. And so after that, I was there for 4 years. And based on my experience with retail investors, I started advising public companies on their messaging strategy, how to understand retail investors. And I had all these conversations. And then the second layer to that was I started, hosting podcasts for Morning Brew and SoFi and others. And I ended up interviewing over 100 CEOs and CFOs. So I had all this information about what was happening. And when I looked out there, I saw, a lot of articles about this for companies, but no one had really kind of put it all together in one place in terms of what this all meant for people at companies and leading companies. So I decided to write the book.
And you've got such a unique perspective, right? You're at the intersection of marketing and investing, and if the book itself touches on narrative, it touches on AI, obviously, it touches on something we talked about on a previous episode around decentralized news, right? Once upon a time, you just had to be on CNBC or be on Bloomberg, and it was job done, get featured in the journal or the FT. But now it's everything everywhere all at once. And, you can break yourself in half trying to do all of that, or you come up with a really sensible strategy that puts you in the right places at the right time in front of the right people.
Yeah, it's overwhelming for these companies because, traditionally IR, you're thinking of only a few channels. You have maybe a spreadsheet with all the analysts that you need to know, and you have your institutional investors that are really important to keep in the loop, and then you have the financial media. Pretty easy to track. And I think a big challenge is looking at all of those plus Reddit, X, platforms, creators that are focused on covering you, newsletters, it just proliferates. And for a small team, it's like, how do I wrap my arms around this? How do I figure this out?
Exactly. And we're coming from a world where you said it exactly right. You've got those analysts who cover the stock, who get the story out there, a handful of journalists, but ultimately the narrative, and that's just not true anymore. So how do companies, issuers stop that narrative spinning out of control? What are the things that you dive into in the book and beyond that just helps people wrestle back control and keep control of the story they're telling?
Yeah, control is a funny concept when you talk about retail investors because to some degree you can sort of control and shape into another. It's being reactive and opportunistic and listening and understanding what's out there. I think on a proactive standpoint, easy step to start with is just thinking about your narrative and your messaging structure. And the big piece of this that I think is fascinating is what changes when you're talking to everyday people. When you're talking to institutions that have a large holding in your business or analysts that cover specifically your space, they're in this world. Like if you're an analyst covering biotech, you know what the clinical trial stages mean. You know what's out there in the market. Like this is their specialty. And so what that means when companies are talking to those groups, they don't necessarily need to contextualize things in the same way. They're talking to people who are in this every single day. They can be a little more, heady in their descriptions. They can use jargon and people get it. They're speaking the same language. If you're a biotech company though, and you're trying to get in front of retail investors, there's this educational gap to fill. And I think importantly, that does not mean retail investors are stupid or they can't grasp these concepts. It just means that they're not living in this world day to day. They need like a step before. So like a very easy example is if you're a biotech company and you're communicating out to retail investors about entering a new phase of a clinical trial, you might want to remind people what these phases mean, what they unlock, how that moves you towards commercial viability. It doesn't add that much work, but it's this step of talking to someone who's not in it in the day to day. So I think that's one big thing is thinking about your story and how you're messaging. And that could be at a business level in terms of, you see companies all the time. If you're in advertising, you might say, I'm trying to think of an acronym, or maybe it's like a CAC, what's your customer acquisition cost if you're growing as a consumer app? If someone's not in the day to day and you're just throwing CAC out on a podcast or something, you might lose people. So you say, oh, we measure CAC because of this. So that's one thing, the context. Another thing that I've seen work well at the narrative level is when companies are able to tie what they're building to something bigger than themselves. An example I use in the book is Open Door. Open Door is a real estate tech company that was sort of revived in the past couple of years. A large thanks due to the retail investor community that sort of embraced it. But if you look at the people out there talking about the company, they're tying it to the concept of the American dream, specifically in the US, the American dream being tied to home ownership. And they talk about how, younger generations are unable to purchase and own homes in the way that previous ones are. And they link what they're building back to that challenge. And that is a challenge, like whether you care about real estate or real estate tech, like that is something that like a lot of people can relate to. I think Palantir is another company that does that. They are putting out a story about quote unquote Western values that attracts some people and might, not attract other people, but they're very unabashed and that's what they're about, But if you break down the product, this is a data orchestration AI company. Like no one cares necessarily about that. They care about what it's trying to do. So I'll stop there because I could keep going.
What rings so true to me is, we say this for ourselves, but also with the partners we work with. People read, maybe the Journal or Bloomberg because it's their job. They already know why they care, right? If I'm the biotech analyst, I know why I care about phase trials, right? I know what it unlocks. I know what it means for the share price. But everyone else, modern investors who are going about their day to day, maybe spending 15 minutes a day on this, if that, they don't know why they should care. And so it's your job to tell them why they should care, right? You've got to earn their interest day in, day out, with every release, with every sort of touch point.
Yeah. And it's muscle memory thing. You're living in this day to day. You're the CFO. You're not thinking, oh, I got to break it down. It's a little bit of a shift, but it's an easy shift.
I want to go on a bit of a diversion and give the detractors something to think through, because the detractors will say, and in a past life, I was an equity research analyst. So I may have been guilty of saying this once upon a time, that if you let the story drive valuation, if you let the narrative take hold, stocks can run over and above where they otherwise should, or be punished when they otherwise shouldn't. And I guess maybe to help the detractors, I guess, get on board, are there examples of people who have done that well with the narrative? And you talked about Open Door and Palantir. I guess I'm thinking maybe in the crypto space, where narrative has so much heavy lifting to do a lot of the time. Can you maybe share, what those guys are getting right?
I think I'm agreeing with where you're coming from, in that from just a pure marketing lens. You could have the best messaging and the best story and the best marketing in the world and the flashiest ads. If the product sucks, to be crude, if the product's not good, that's not enduring. You're not building anything enduring. You might get some hype and interest. I don't think that can ever replace the fundamentals of a business. I think the role of narrative, though, is in an environment where, people are on their phone investing in stocks, and you're competing against a WhatsApp group chat, a TikTok someone shared, an Apple breaking news alert. Like, when you're competing against all those things for attention, narrative is what gets people interested. But I think what keeps people interested is building a sound, viable business that has fundamentals, or at least a growth trajectory that people can believe in. I point this out in the book that it's like, that's important. Like, the narrative is important. Executive branding is important. If you have a CEO that's charismatic and out there, but at the end of the day, when the rubber meets the road, investors are looking into the numbers. They're not just following. And that shifted. Like, I think that first meme stock wave was a very important moment in terms of how people started looking at these things. There's still like meme stocks and moments that people jump on opportunistically, but that kind of forced people to look under the hood after their interest was captured. And I think, that's an important thing to keep in mind, that it doesn't matter how good or how innovative your like retail IR strategy is. If when you get people interested and they like look into like your business, if they're not buying what you're selling after you get their attention, like, what's the point?
Completely agree. You can only put lipstick on a pig so long, right?
Yes.
So you've got to have something good there. If I just take a step back, right, the challenge facing IR teams, it feels immense. You've got challenge for attention. You've got the fragmentation of news sources. I remember you say something in the book around how you might put your press release out and have your senior leaders go and do an interview on Breakfast TV or on CNBC. But the thing that really catches hold is the TikTok that takes a completely different interpretation of what you've put out there and runs with it. And that's what catches fire. And that's what the market starts to believe. And then you've got AI and the proliferation of AI in whether it's content creation, whether it's, you talked about executive branding there just a second ago, whether that's LinkedIn posts or videos or everything. I guess the scale of the challenge feels bigger than ever. How does an investor relations team look at all that, think, I have my company here, or I have my ETF or ETP or product here. Am I going to, scale this challenge, scale this wall?
It's so daunting because for many reasons. One is when I started talking to these teams, I was absolutely shocked by how small many of them are. Now, a lot of companies use agencies and IR consultancies, but we're talking huge blue chip companies with like a 3-person IR team. They're not big teams. That's one challenge. The second challenge is all of these things that you listed involve different skill sets and resources than IR teams are typically connected to. Something as simple as, sure, let's get our CFO to do a quick LinkedIn video explainer after earnings. Okay. I mean, you guys know you do content. You need a producer. You need someone to set up. Maybe you need a set. Maybe you need a script writer. Now you need a video editor. These are all things that are on the marketing side, if that. some companies don't even, if they're not consumer marketing, they might not even have those. So that's the second piece. The third piece is, I think, just prioritization of everything.
Yeah.
In the context of, at the end of the day, the IR teams are still optimizing towards pretty much one metric, which is the share price.
Yeah.
And as is the great debate with any sort of branding, marketing kind of conversation, you might invest in, engaging your retail investors, engaging key creators. That's not going to show up in the stock price next week or maybe even next quarter. And so you have things that matter, and IR teams know this stuff is important. It's something they have to deal with. At the end of the day, they report to the CFO and they're looking at the share price. And so they are in this impossible situation. And one of the pieces of the book that I think would be helpful for these teams is if they were able to be a little bit closer to the marketing function, because I really believe that like retail investor relations is way closer to just straight up consumer marketing than it is traditional IR. And it's actually it's not fair to ask the IR people who are used to doing specific things to all of a sudden know how to like write a thread on X that's going to capture attention, like very different skills. So I think there's a lot of reasons why this hasn't happened. And it's not because IR teams are like poo-pooing retail or, not caring or not getting it. It's that they're optimizing towards their immediate goals. They don't necessarily have the skill sets by no fault of their own. And they have, they're a little far away from the teams that do have those skill sets.
I'm stealing this quote from Nirav Karia from a few weeks ago. Which company, consumer-facing business, anywhere in the world, only markets to its customers 4 times a year? Right. And you can name, that's a very short list, yet every company does that more or less with its stock price. And they don't necessarily do a good enough job of telling that story, A, around those big events, or B, throughout the rest of the year. And so there's a huge, opportunity there.
I'll also point out that there's like regulatory limitations, right? Like there's quiet periods. Like you're not allowed to necessarily be always on. So that's another hurdle completely, where it's like the expectation is like 24/7 communication. And when I complain to a CEO on X, I expect them to write back. Like you can't, even if you wanted to, you can't really do that. So it's they got maybe 2 hands tied behind their back as they're trying to figure this out.
Yeah. I had a similar thought around community as you're alighting on with retail investor engagement as a strategy, which is, at first, you probably have to, as an organization, do the things that don't scale, do the things that hurt in order to build the muscle and the capability to do this well. In that, I've spoken to tons of financial services firms who think, we'll get picking on marketing here, but we'll get the marketing person to build a community of our investors, right, and they'll be really loyal.
Make us go viral is what we joke about.
Exactly.
Like, okay.
Don't mind me, I'm just making a viral post.
Right.
And it just obviously comes to nothing. And frankly, knowing that if you commit to this, even a couple of percentage points of improvement, however you're measuring it, puts you way ahead of everyone else at this point.
Yeah. The step I think a lot of people miss too, and it's totally reasonable because you're like under all this pressure. And I've heard IR people say, there was a board meeting and someone was like, what is our IR strategy? What are we doing? And then people are like, they jump. Or they start thinking about this in the moment where like they're getting like, blown up online, good or bad. And there's a lot of Cracker Barrel's an example of that. On the bad side, in American Eagle last summer when they signed Sydney Sweeney, all of a sudden everyone was trading American Eagle. I was thinking these people are probably like sitting at their desk one morning being like, what the hell is going on? And that's when you think about it. But I think the step before is kind of an audit of where you're at. So, in the US, getting a NOBO list, understanding like, a lot of companies don't have line of sight into how many individual investors they have, who these people are, which apps they're using, what profile of investor are they? Are they buy and hold? Are they trading in and out? Like this is data that's not easily accessible for many reasons. And then
Yeah.
there's also like social listening. Like the internet for companies is such an amazing wealth of aggregate information. There's tools like Sprout that you can use and really track your ticker brand. And this is what big companies do with their regular brand, but seeing where there's seeds of doubt, or is something you said in a press release getting totally mischaracterized, or even seeing what do people say about your company on Reddit versus a competitor. That's like a starting point, and then that should lead in to the strategy itself, versus what I see a lot where I'll pick on like the executive branding angle. I've heard so many times people say, we want our CEO to be out there like Alex Karp.
Right.
Like that works for him because it's him. It's his persona. He's got this like mad scientist thing. He's got the hair. He swears. It works for him because if you zoom out on their stock price, they're performing. And that's part of the brand.
Yeah.
It doesn't work for everyone. So you got to figure out what works for you. And in order to know what works for you, you need to know where you're at, what people think of you now, what your executives are capable of doing, and then figure out, the authentic program that works for your company.
I completely agree. And frankly, if I see another copycat John Gray video of someone running around a city trying to talk into a camera, I think I'm going to destroy my phone. Switching gears a little bit, Finfluencers. I guess they're a part of the mix as well.
Yeah.
Where do you land on them, for good or for ill?
I really don't like that word. One, it just like, I don't know what it is. I think adding like influencer to anything just like, I think diminishes it. I think that came about in like 2021 when you had people like Finimize putting out like amazing content and conversation that was like well researched and academic, but still accessible. Next to people on TikTok being like, I just sold my house and went all in on Dogecoin. And like somehow both of those got labeled Finfluencers. So I think what's interesting, and I saw this, and we did research when I was at Public on like trust in financial influencers. What you saw is like after 2021 into 2022, when things started to, peter out and even out, a lot of people took that as a lesson of being a little more careful about who they're following and listening to. And I think there is a great crop of financial creators out there, well, whether it's Substack or newsletters or even like on social. There's a really solid group of people that are doing amazing work. And so like when I talk about those people, I just call them like financial creators. I don't think it helps, but I think about people like Austin Hankwitz or Kyla Scanlon or Zaid Admani. There's so many, but they're so good. And that's why it's funny. You see, they started on TikTok and now they're contributing to Bloomberg. It's interesting, and it's indicative of broader trend of like retail investors overall, where when you labeled people Reddit investors after 2021, everyone's like, dumb money. When there's Reddit investors that are doing like very thorough analyses and having new perspectives. And if you look at Amit is Investing is one huge YouTube channel. I just saw on X, like the Palantir team invited him over as part of their, like he's like in with the company in a way that some of these journalists covering the company aren't. So I don't like the word, but I think I have an overall, the people I follow and respect and look to for like sources in the book, they're so good. And they're an important part of the ecosystem.
I believe that part of the success of the ops space in general, whether that's private asset, crypto, DeFi, even prediction markets, is that they overall have welcomed people in with open arms, not treated people like idiots, not spoken down to them, and given them access where traditional financial services have been either treated you with kid gloves or said, oh, you can't do that, it's too risky, or oh, you're not rich enough for that. And I wonder whether is that the entirety of the story, or are they doing something on the, let's call it the investor relations side, that TradFi, just to bucket everyone else, should be learning from?
Ooh, I think that's a very astute observation. I've never thought about it that way. But I I think you're onto something. I think the companies that are doing like the public companies that are offering stocks that are seeing success are kind of stealing pages out of the playbook of, I'll just start with crypto. Because those crypto communities, when they were started, the people building these communities were marketing people.
Yeah.
And what's interesting now is, now that I'm more in this world, now they're adding, head of institutional engagement, like after. So the order's switched.
Yeah.
Now they got to figure out how to tone it down to go after the institutions, and it's a flipped order. And they're almost, and it's fascinating in all aspects, but like TradFi and DeFi are needing to steal pages from one another's playbooks to be successful. The DeFi people are needing to sort of grow up and level up in certain senses. And I've been to like 10 crypto conferences this year. No one's wearing costumes anymore. It's all suits. There's like 10 guys from EY like rolling into these meetings. And I'm kind of new to this world, and people are like, you should have been here like in 2022 or whatever. And then on the traditional finance side, it's like, cool. Like, you even see, you had Van Eck at your conference. Like, how do we understand new media? How do we understand the way to connect to these other audiences? And they're sort of learning. I think that that crossover is really healthy and good.
I think so too. I think there's lessons to be learned, certainly on the TradFi side, from everyone else. I would hope that rather than everyone else having to put suits on in order to with the big institutions just realize, oh wait, I'm just a regular person, and I don't have to be in a suit in order to be spoken to normally, and in order to wrap my head around this. And everyone just sort of takes the temperature down.
I think it's interesting. I think it's happening. It's almost like suits and sneakers. Like Zero Hash had a big summit at the stock exchange, and it was executives from like BlackRock, BNY. Like it was like, all the Wall Street people that literally like walked across the street to the stock exchange for this thing. But one of them, the panels where people were leaning in the most was actually a panel of all ecosystem leaders.
Okay.
And it's Stellar there and Midnight, and like it was sort of the outsiders speaking to the insiders, and it was really interesting to see that crossover. So I think that people are leaning in a bit, but it's kind of going both ways.
Cool. Okay. Well, drag those people over to London and bang some heads together, because it's taking too long over here. Let's jump into IPOs, because this has been a big year for IPOs. We've obviously had SpaceX go public in the biggest IPO ever. We've had sort of ADR listings that have been notable. We saw with the SpaceX IPO just how much stock was made available to investors, sort of the scale at which basically has never happened. Should that be the model going forward? Is SpaceX the exception? Or could a widget manufacturer that might not be exciting generate the same amount of hype and interest if it's taking control of the narrative in the right way? Some
of the companies you mentioned have an unfair advantage because of interest in companies pre-public. For some of them now, where, OpenAI, Anthropic is far more well-known than a lot of companies that have been publicly available to investors for decades. What's going to be interesting about that is you've seen a surge in, to your point, like alts in private market investing. There's platforms like Fundrise. You have Robinhood's venture fund. People are getting into sort of the VC side of things as sort of a knock-on impact from their interest in stocks. And tokenization will only accelerate that. So it'll be interesting to see. Like one kind of thing I think about with the book is, if you're at a hot tech company, you got to start thinking about retail investor relations before you're public potentially. If there's ways of accessing these things, it starts way sooner. I do think the IPO has historically been one of the most marketing like moments in IR, even historically, and it's always been a big to do when a company goes public, and it's really a product launch to the world. I remember being down. I had to film something at this stock exchange during the Figma IPO, and like I could barely get into the building. There was food vendors, there was street teams, there was I think like a flash mob. Like Someone
Oh my
handed me like a
goodness.
t-shirt and a swag bag. I was like, what the? That was, exception though, right? It's New York tech community is very strong. A lot of people use Figma. They played into it.
Yeah.
For a pharma company might be a little different, but it's interesting because IPO day has always been, but is even more so now. This is like a product launch, a consumer product launch, because now everyone can access it. So you're seeing a lot of people put a lot more weight into those. I do think certain companies have a distinct advantage, and I do think to certain companies it makes sense to like invest more in that day.
Yeah.
But it is like one of those things that's always been sort of the marketing moment for the company, even before retail investors were where they're at today.
I probably should have asked this earlier because it's the implicit through line through a lot of what we're talking about, which is diversity in finance. I think looking at both of us have a vested interest in that topic. You've been relatively, I'd say, famous in calling out, breaking down the sort of club that is, Wall Street and the City of London and beyond, both from a business point of view and as a moral imperative. And I guess the question really is, one, where do you see us on that journey? And two, does the rising power of retail investors and the imperative to engage them help move this along, do you think?
I think the latter point, absolutely yes, because there are naturally there's more democratization in terms of not only people who can say things, but also build audiences. And a lot of the people I referenced before, they don't look like everyone when you go down to the stock exchange or come from the same backgrounds. I think that's been really important. I think there's been a lot of people and companies doing amazing work here. One I'd love to shout out is Commonwealth. They're a Boston-based research firm, and they focus on working directly with fintechs and financial institutions to understand sort of the systemic things that come into play here. So I know they do a lot of work with BlackRock, understanding for moderate to low income individuals. When they do get access to stocks, and they'll give them like seed funding, they'll work with a company like a Public or someone else and say, we're going to give you $100 and you're going to have a mentor and we're going to build. And they get the learning experience, but also there's amazing like psychological analysis that comes into play. And one of the important things I think Commonwealth found is when people start and have access, they view themselves, even the act of managing a small portfolio, they view themselves as an investor. They take pride in that, and they're motivated to learn more and go further. I think, the fractionalization of assets has been really important there. Just, giving people the ability at a smaller, buy-in, whether, it's a fractional stock or crypto, it's small skin in the game. And I think that's important. You don't want to, risk more than you can. But it does have a fundamental impact on people's identity, how they see themselves. And all of a sudden, when they see a Finimize ad and want to join the newsletter, they say, you know what, I own a little bit of Ford Motors and I own this ETF and this is for me. And I think that's a very simple thing that's important. So I think there's been a lot of work to be done here. Like you and I both are like in these worlds, like we're not even close to where it could or should be. I think there's the stat that's still, there's more John named CEOs of public companies. And I think women or people of something, I don't mess up the stat, but like more people are named John than like, all others. So it has to, there's so many forces at play. And I think there's things that what I think about too, just in my background is like, what can the things I'm directly involved in, how can those help? I do think and I call this out in the book, on the executive branding front, I think it's really interesting to think about this push towards like authenticity and like being funny and having a shtick, and how that could actually harm, diverse leaders, because the research will show that, a woman being funny in a leadership position is seen as a bad thing, or, a person of color making a flippant comment or getting angry with investors is going to be perceived very differently. And I think that's really important on that front. And I don't see a lot of people talking about that. But the things that people like love about certain CEOs, if you had someone else doing that who didn't look like them, very different perception. And that's fundamentally like not fair. But I think it's interesting to call out that creates another unfair advantage for those groups.
That's a very fair point. I think the UK version of the stat you called out is that there are more fund managers called Mark than there are women fund managers in the country.
Oh my God, all the Marks.
Yeah. Maybe it's Mark, maybe it's John, but I mean, it's...
Yeah, Mark and John doing well.
Yeah, good for them. What's the most ridiculous or funny or strange sort of news story or topic you've come across in the last couple of weeks?
Oh my God, there's so many. Can I do an all-timer?
Yeah, hit me.
Can I do Okay, so an all-time story that stuck with me, and it's actually in the introduction of my book, is when I met these two YouTube creators, Ben and Emil, and they're amazing. They're comedians, but they get business. It's this weird intersection. If you don't follow them, they're good. But I got introduced to them, and they were telling me they used to have this show called Trillionaire Mindset back in like 2021. It was quite popular on YouTube, but it was a money show, but they would do like funny things too. They have a very like cult following. And right after the GameStop thing happened, Robinhood was correctly like going to like podcasters and creators and being like, hey, we need to get Vlad Tenev on your show. We got to like smooth this over, because he was people forget. I think people hated him. I've interviewed him. He's like a nice guy, funny, charming, but like people hated him. So he goes on this Trillionaire Mindset show, and these guys, I mean, if you watch it, they're not serious. Like they're very smart, but they're not serious. Yeah. So one of the first things they do is they give him this huge, like oversized hat that just says something like, oops, my bad. And they make him wear it the whole interview. And then they're making jokes, and they're not being rude, but this is just their style. And at one point, Ben says to Vlad, he's like, you know what? He's like, people just hate you. You have a co-founder, like just quit, just like take the money and quit. Like no one even wants you here anyway. And this is like Vlad Tenev before, I mean, this is before the white suit and can, and like, this is like a different version. And he's a young guy anyway, so he was younger. So the whole thing is funny to watch. It became even funnier because I was at an event a year ago, and Vlad Tenev won this like retail investor award, and the host was talking about how this is like such a full circle moment, and they played a clip from the show, and actually Ben and Emil were at the show, and they revealed that they were both on acid during the entire interview. So like to me, yes. So like, and they didn't say it on the interview. So it's like, this is like the perfect story for companies, right? It's like, you think you know what you're walking into, and you have no idea. Like what could possibly be different than like two affable YouTube guys, tripping, like telling your CEO to quit with like sitting down with like a CNBC anchor. Like it's like, so those are the things, and those are the two extremes, but that's literally what they're dealing with. I just thought that, and honestly, it was a great video. They did a great job. I think Vlad came off looking like he was a little awkward, but you kind of felt bad for him, which I think worked in his favor. But that's like to me, the like quintessential, like where we're at. Yeah. Where like as a CEO, you got to be able to do both. And like, I don't think people appreciate how hard that is.
Yeah. I mean, they make the curveballs I get look like softballs. So
yeah, it's good though. You should check it out. And like all of Ben and Emil's stuff are great. And it's funny because at the event, like Vlad made like a video accepting it, and he was laughing about it. Everyone's laughing about it, and like we've all kind of like evolved from that point. But it's just such a funny moment in history that when I tell people, they're like, "Oh my God, I never saw that video," and then they go watch it and they're like, "Oh my God, that's crazy."
Before I thank you and let you go, please tell us where we can find you, Zero Hash, and where people can get Ticker Shock.
Amazing. Well, first, Carl, thanks for inviting little old me on your show. I know you have some big dogs. This is my book, Ticker Shock. It covers a lot of the things we talked about today. As Carl mentioned, it's a pretty quick read. I wouldn't call it a beach read, but it's good if you want to flip through and get a sense. You can buy it at tickershockbook.com. It's also on Amazon, Barnes & Noble. You can order it at Target, Walmart, all the places you order books, but all those links are on tickershockbook.com. finfluencers.com. I'm on Twitter at Katie E. Perry, LinkedIn. As Carl mentioned, I'm also, my day job is I'm CMO of a digital asset infrastructure company called Zero Hash. We partner with traditional finance firms to help them add digital asset capabilities on our tech and regulatory stack. So you can follow Zero Hash at ZeroHashX or zerohash.com. And also, thank you to Finimize. I've been honestly, I feel like I've been a part of the community for 6 years
100%.
now. And it's been so amazing to see everything you guys have been doing. So big fans of all your work.
That's very kind of you to say. Thank you so much for joining me here today. You said big dogs. You are one of the big dogs, Katie.
I'm maybe a medium dog, like a terrier maybe.
Okay. Yeah. In all seriousness, Katie Perry, thank you so much for joining me on Retail Investors Decoded.
Thank you.